Your credit card journey starts now. You're in your 20s, a time of exciting changes and new beginnings. In this world of adulting, credit cards can seem both alluring and a little scary. They offer convenience and can help you build a strong financial foundation. But they can also lead to debt and financial stress if not used responsibly. This is your guide to navigating the world of credit cards. We'll explore the good, the bad, and everything in between. By the end, you'll have the knowledge to use credit cards to your advantage. Let's get started. Credit cards often get a bad rap, and for good reason if they're misused. But the truth is, they can be incredibly useful tools when used responsibly. Think of them as a financial stepping stone, a way to build a positive credit history. One of the biggest perks of using a credit card is the ability to build credit. Think of your credit score as your financial GPA. By charging everyday purchases and paying your bill on time, you demonstrate financial trustworthiness. Credit cards also offer convenience. They're widely accepted, so you don't have to carry large amounts of cash. But remember, this convenience and credit-building power comes with responsibility. It's like having a superpower. You need to use it wisely. Credit cards can be incredibly useful, but they also come with potential downsides. The biggest pitfall is the ease with which you can accumulate debt. It's easy to overspend when you're not physically handing over cash. Those tempting buy now, pay later offers can quickly turn into a mountain of debt. Another downside is the high interest rates associated with most credit cards. If you carry a balance, the interest can quickly add up, making it even harder to get out of debt. Remember, credit cards are a tool, not a free pass to spend money you don't have. Understanding the potential downsides is crucial to using them responsibly. Walking into a bank or browsing credit card offers online can feel like navigating a maze. There are so many options, each with its own set of terms, fees, and rewards. But don't worry, we're here to help you decipher the credit card jargon and find the right card for your needs. First, consider your spending habits. Are you a frequent flyer? Do you love dining out? Some cards offer rewards like cashback or travel miles. Next, pay close attention to interest rates. Look for a card with a low APR, annual percentage rate, to minimize interest charges. Finally, read the fine print. Understand the fees associated with the card, such as annual fees, balance transfer fees, or late payment fees. Choosing the right credit card is a personal decision. Spending wisely. Don't fall into the debt trap. You've got your shiny new credit card and it's tempting to swipe it for everything. But hold on. Before you go on a spending spree, let's talk about using your card wisely. Remember, a credit card is not free money. It's a loan that you need to repay. A good rule of thumb is to only charge what you can afford to pay in full by the due date. Create a budget and stick to it. Track your expenses and see where your money is going. Avoid impulse purchases. Using a credit card wisely is about making conscious choices about your spending. Interest rates, the silent credit card killer. Interest rates can be the silent killer of your financial well-being. They might seem like just a number on a page, but they can quickly turn a small balance into a mountain of debt. Think of interest as the price you pay for borrowing money. When you carry a balance on your credit card, you're essentially taking out a loan. The higher the interest rate, the more expensive it is to borrow money. Credit card interest rates can vary widely, from single digits to over 20%. Look for a card with a low APR, especially if you tend to carry a balance. By understanding how interest works, you can make informed decisions that will save you money. Building a solid credit history, your ticket to financial freedom. Building a solid credit history is like building a strong foundation for your financial future. It opens doors to better loan rates, higher credit limits, and even better job opportunities. One of the best ways to build credit is by using a credit card responsibly. Charge everyday purchases and pay your bill on time, every time. Another way to build credit is to become an authorized user on someone else's account. However, be cautious about who you share credit with. Building a solid credit history takes time and effort, but it's an investment worth making. It's your ticket to financial freedom. Emergency fund versus credit cards. Know when to use each. Life is full of surprises, and not all of them are pleasant. We often find ourselves facing unexpected expenses that can throw our financial plans off course. These surprises can range from minor inconveniences to major financial setbacks, and it's crucial to be prepared for them. Unexpected expenses like car repairs, medical bills, or job loss can pop up when you least expect them. Imagine driving to work one day and your car breaks down, requiring an expensive repair. Or perhaps you suddenly fall ill and need to cover medical bills that aren't fully covered by insurance. In the worst-case scenario, you might even lose your job and need to find a way to cover your living expenses while you search for new employment. These situations can be incredibly stressful, especially if you don't have a financial safety net in place. That's where an emergency fund comes in. An emergency fund is like a financial cushion, providing a safety net for unexpected expenses. It's a dedicated savings account that you can tap into when life throws you a curveball. Building an emergency fund takes time and discipline, but it's one of the most important steps you can take to secure your financial future. Aim to have 3 to 6 months worth of living expenses saved in a separate, easily accessible account. This might seem like a daunting goal, but you can start small and gradually build up your savings over time. The key is to make regular contributions to your emergency fund, even if it's just a small amount each month. Over time, these contributions will add up, and you'll have a substantial financial cushion to fall back on in case of emergencies. Having this safety net can provide peace of mind and reduce the stress associated with unexpected expenses. It's important to keep your emergency fund in a separate, easily accessible account. This ensures that the money is readily available when you need it, but also helps to prevent you from dipping into it for non-emergency expenses. Consider using a high-yield savings account to earn some interest on your emergency fund while keeping it safe and accessible. Credit cards, on the other hand, should be used as a last resort in emergencies. While they can provide access to funds when you need them most, relying on credit cards for emergency expenses can lead to high-interest debt that can be difficult to pay off. It's important to use credit cards wisely and only when absolutely necessary. When you do use a credit card for an emergency expense, make a plan to pay off the balance as quickly as possible. This will help you avoid accumulating interest charges and keep your debt under control. If you have a high-interest credit card, consider transferring the balance to a card with a lower interest rate or a 0% introductory APR offer to save on interest. Credit cards can be helpful in a pinch, providing access to funds when you need them most. However, they should not be your primary source of emergency funds. The best approach is to have both an emergency fund and a credit card. This way, you can use your emergency fund for most unexpected expenses and rely on your credit card as a backup plan. Having both an emergency fund and a credit card provides a balanced approach to managing unexpected expenses. Your emergency fund serves as your first line of defense, allowing you to cover most expenses without going into debt. Meanwhile, your credit card can be used for larger or more urgent expenses that exceed your emergency fund. It's also important to regularly review and adjust your emergency fund as your financial situation changes. If your living expenses increase, make sure to increase your emergency fund accordingly. This will ensure that you always have enough saved to cover your needs in case of an emergency. In summary, an emergency fund provides a financial cushion, while a credit card serves as a backup plan. By having both, you can be better prepared for whatever life throws your way. Start building your emergency fund today and use your credit card wisely to ensure a secure financial future. Remember, the goal is to be prepared for the unexpected. With a well-funded emergency fund and a credit card as a backup, you'll have the financial tools you need to handle any surprise expenses that come your way. Stay disciplined, keep saving, and use credit responsibly to maintain your financial health and peace of mind. Credit card rewards, free stuff, but at what cost? Credit card rewards programs can seem enticing, offering cashback, travel miles, or other perks. While credit card rewards can be valuable, it's important to understand the potential downsides. The biggest risk with credit card rewards is that they can encourage you to spend more than you normally would. Another potential downside is that rewards programs can be complex and confusing. Each program has its own set of rules, restrictions, and redemption options. If you decide to use a rewards credit card, choose one that aligns with your spending habits. Focus on using your card responsibly and paying your balance in full each month. Your credit future starts now. Be smart, be in control. As you navigate the world of credit cards, remember that knowledge is power. By understanding the ins and outs of credit, you can make informed decisions that will benefit your financial future. Start by choosing the right credit card for your needs. Consider your spending habits, credit history, and financial goals. Once you have a credit card, use it responsibly. Charge only what you can afford to pay in full by the due date. Track your spending and review your credit card statement each month. By following these tips, you can take control of your credit and pave the way for a bright financial future.